Hey guys, Whitney here. I'm so excited to have you here for another episode of our Passive Investing Made Simple Masterclass. Today, we're going to wait for a few more minutes as people file in the room, but today we are going to tackle a hot topic, which is how do you vet an operator? And I am really looking forward to sharing with you some of the questions that I pose to operators that I invest with. So again, we're going to give it just a couple more minutes and let people file in the room. But as we go through today's conversation, if you haven't joined me before, go ahead. If you have a question, feel free to pop your question in the chat box or in the Q&A box, and I can definitely get those answered. We'll either go through the presentation and get them answered in the presentation, or since you guys are here joining me live, as you know, I always hang out a few minutes after the end of the presentation and get all your questions cleaned up. So again, thank you so much for joining me today. If you have not been to one of these presentations before, my name is Whitney. I'm the Director of Investor Education here at PassiveInvesting.com. And I do this weekly masterclass because maybe you've tried to invest passively before, but just actually couldn't get comfortable making the investment. Or you've invested in a deal before and you're like, oops, I've made a mistake. Or you're just so overwhelmed by all the information out there, I don't even know where to get started. If that's you, you're in the right place, because here in the Passive Investing Made Simple Masterclass, and a lot of the videos that I put out on YouTube under the PassiveInvesting.com umbrella, I help you learn the biggest myths that keep passive investors sidelined from ever making a passive investment. I also help you learn the different terms, pros, cons, and even math around passive investing so you can avoid making costly mistakes. And I just show you how to put all this knowledge into use so you can confidently go into your first or next investment. So again, if you haven't joined us in one of these master classes before, I'm Whitney. This is the whole reason why I invest in passively, is because of me and my crazy crew. I actually started off investing in 2002, living, flipping, and house hacking. I mean, those terms had never even been created at that point in time. Totally by accident, I bought a house with a significant other, and it needed an extensive rehab on it. And I mean, almost immediately the relationship fell apart and I had a house. YouTube didn't exist back then. And so I went to the Home Depot and bought the Home Depot 1, 2, 3 book and taught myself like how to do everything down to drywall and plumbing, which I don't suggest. But that was, really what I felt like I had to do in order to get that project off the ground. Made a considerable amount of capital on that particular project. And I was like, wow, actually exceeded what my annual salary was. And I'm like, how many more of these projects can I do? So I did just that. Spent a few years, did a few more projects by myself, living, flipping, and house hacking, and then got married. And my husband joined in my antics for a few more years. And that's when we realized, how do people actually retire off of flipping and house hacking? And we're like, wow, I think we missed the boat. We actually have to create passive income for ourselves. We need to get invested in a strategy where we can harvest the income today, and then the asset can continue to grow over time for us. And so we transitioned to what we knew best, which is single family investing. And we scaled a rental portfolio of about 30 properties out of state. And that's when we had our little child. And I wanted to stay home with her. I was also taking care of 3 family members and working full time. And I was like, man, we have got to find a different way to scale our portfolio that doesn't require my time to do it, our time to do it. And that's where we transitioned into passive investing. But, also we were taking a look at like, just how do we scale our portfolio? And since then, we've actually been able to scale our portfolio quite, considerably. Now, if you guys are only joining me on the masterclass side of things, you probably have never seen these stats before. But my husband and I, in partnership, we own over 6,300 multifamily units, residential units, a little bit of residential assisted living in there, single family, still Airbnbs as well. And we have over 1,400 self-storage units. Okay, majority of this is in passive investments. But these are just vanity metrics. What this has allowed us to do is actually take control of our time, 100% control of our time. Now, you know, I still work very hard. My husband still works very hard. You know, we are not the type that are going to go lay on the beach, drink margaritas, beer all day long. We are very much, you know, still working very hard to create an impact in our world. And that is what passive investing has allowed us to do, is really transition ourselves into, you know, that more impactful work that we both enjoy. Now, we can actually help you do that here at passiveinvesting.com. Access this very powerful investing strategy. We have over $820 million multifamily portfolio, more than 3,700 multifamily units under management. We have darn near the same on the self-storage side. We also do, you know, if you guys weren't here with me last week with our masterclass with Kelly Garrett, we actually have a debt fund as well. So we can help you build and diversify your portfolio in a multitude of ways. But what I get to do here every single day is work with you guys, our investors. So, anytime, you know, I have to put this disclaimer out there, anytime that we're talking about real estate, there's the opportunity for us to talk about finances, tax, and legal. Anything I say here is not advice, but education. So I would need you to take these little nuggets and tidbits that we discuss back to your investment team and make sure you understand how it applies to your personal situation. Now, we're not going to get too much in the details here today on a lot of these things, but again, you know, just since the potential is there, especially if you hang on here to the end for the live Q&A, I just always like putting that disclaimer out there. Now, the focus of today's education is really about how to empower you as a limited partner investor to underwrite an operator. Okay, so let's go ahead and take, you know, just a brief second first to define what is an operator, right? You're going to hear terms in this space: sponsor, operator, general partner. Okay, if we distill it, and they can all mean a slightly different things, but when we're looking for how do you vet an operator, this is the person who is tangibly running the deal. Okay, it can be an individual, combination of individuals, or a business entity that is engaged in the business of selling, purchasing, improving, renting, leasing real estate. Okay, you know, the operator could refer to other areas of investing. We're keeping ours contained to real estate today. And for the purpose of deriving income, all or in part from the sale of the asset, purchase, exchange, or rental or leasing of that asset. Long story short, it means the operator is the person, the COO of that business that is executing on the day-to-day operations of the asset. Okay, so when you invest, I personally love investing directly with the operators. Okay, there's a myriad of ways to invest in, you know, passively. You can do it through a fund of funds. You can do it through, you know, a capital raiser or something like that. All viable ways of investing. Okay, and they have potentially different risk profiles, but you need to understand, is that person actually an operator in the deal or not? Okay, so what is one of the biggest mistakes that I see people make, okay, especially limited partners, is that they are so focused on the returns of the asset that they jump into a deal without fully vetting the team that is running the deal. And vetting the team is, quite frankly, the most vital step that you can perform to mitigate any sort of risk on your asset. Okay, because when we are investing, we are actually we are actually investing in an operating business. Okay, so the deal matters, right? We want to make sure we're getting in a good deal, that it has good business plan around it, good returns, but it's the team that's running the business that is where is going to make or break that deal. Okay, it's not actually the building itself, it's the team running the building or the group of buildings. Okay, so it's very important. And you know, I understand where this mentality comes from, because I was right there. I had my single family properties, I was analyzing them, my small multifamilies, and I was very enamored by the returns and the metrics on the deal. Now, when I started transitioning into, you know, investing passively, I too initially made some of these mistakes. I was like, well, the deal is not penciling out like as it should be. because I had failed to look at the team actually running the deal. Okay, so you have to almost, when you enter into passive investing, flip your investing model on its head. It's no longer about the deal, it's about the team running the deal. Okay, I think we've made our point there, but how do we do this? Okay, well, first let's talk about the importance, dig in a little bit more, the importance of why vetting is so important is because when we invest passively, we are creating leverage in our business. Think about this, okay? A business, what's the difference between a self-employed person versus a business operator? Is that the self-employed person might be themselves and maybe like a couple administrative assistants. They have a little bit of leverage, but they're not able to explosively grow or scale. When you start actually investing in businesses, okay, or you're growing your own business yourself, I mean, you're actually starting to reach scale when you get 20, 30, 40, 50 employees under your belt, okay? Why are you hiring these employees? You're hiring them for their knowledge, their expertise, maybe for some of the connections they have, right? This is the same thing that we're doing when we're investing passively in syndications, is that we are choosing to work with a COO, okay, that operator that has the knowledge, the expertise around the investing strategy. They already had the network and team in place. We don't have to do that ourselves as a limited partner. Moreover, they actually have the credit, the lending already in place to acquire the asset. They have the other investors in place that can bring additional capital to access the asset. And we get to leverage their time. Okay. Now, this is amazing, right? When you're scaling, leverage can be amazing. Okay. But it can both cut positively and negatively. So that's why it's so important that we understand who that operator is. Okay. So before we dive into the questions and the conversation around the operator, let's one of the first things that people that I'm kind of like warming up to the idea to passive investing, they were like, well, how do I even find a good quality operator? I don't even know where to look. Okay. Well, you can search for a myriad of operators. I mean, you can go right online and look for real estate syndication operators, not a problem, okay? But I encourage you to understand what your investing goals are first, okay? Do you need cash flow? Do you need equity? Do you like multifamily, self-storage, notes? Like, what do you want to invest in? And what is your risk tolerance? Okay, ask yourself these questions. That way you can actually kind of narrow down the number of operators you're looking at, okay? If anybody's been in sales operations, okay, you're trying to take the person who's investing with you, okay, through a journey, and you're trying to narrow it down, okay? You're trying to figure out who those leads are that are actually going to convert into prospects, okay? No different here. We want to find, there's a myriad of operators. We want to actually narrow down who we're going to talk to based on the people that actually meet our investing goals and our risk tolerance. Okay, so how do we find them? Here's just a few ways that I like finding operators, and I've listed them in a particular order. I like going to real estate conferences, okay, that attract other limited partners, okay? Now, why is that? Okay, is because if the conference is going to attract other limited partners, I can almost guarantee you high quality general partners are going to be there. Okay, so I look for those type of conferences. One that I'm going to this month is the Best Ever Real Estate Conference here in Denver, Colorado, right here in my backyard. I also like talking to other limited partner investors. Okay, who do you know in your network that is already doing this? And continue to expand your network and adding, as you meet more limited partner investors. Okay, get their names. Okay, you guys actually talk to each other. Now, I'm more of an introvert. I'll openly admit that. So, I actually kind of like third-party groups, right? I don't have to do all that networking myself. I can actually kind of enter a group, and a lot of that networking has already been done by somebody else. So there's third-party groups out there like Crowdfund DD, and then also Left Field Investors. There's a couple others, that are more regionally focused, but those can be some nice places for you to meet other like-minded limited partners and share, operator contacts. Of course, you can always do an online search. I mean, that is the amazing thing of the internet right now. Again, the online search, it's really hard to tell who is an amazing operator. So you're going to have to do a far more vetting on them. But that's also a possibility. And then online real estate forums and meetups. Okay, that can be another way to meet, more local operators. Okay, so this just gives you a few ideas on where to find operators, right? Now, how do we vet them? Okay, these are actual questions that I ask, and I've kind of bucketed them, put them in buckets. But really, how the process looks is that you're going to find an operator. Okay, and you might go to their online page, and they have a form that you can fill out that says, join our investing club. With passiveinvesting.com, join our passive investor club. Okay, you can fill out the form, and if they've got their technology in place, you're probably going to be able to pick a time to talk to somebody on the team pretty immediately. Now, that conversation is a two-way interview, right? The operator is trying to understand your what your needs are as an investor, understand, can you actually evaluate the investment? Okay, are you what we call suitable for the investment? But conversely, it's also an opportunity for you to really kind of get some closure on your research on the operator and ask some pertinent questions. Now, I always encourage people to, maybe jot down these questions and do as much research as you can up front, because sometimes that call might be 15, 20, maybe 30 minutes. And that can be a pretty short time. So if you have research done ahead of time, amazing. However, if you can't find it, make sure that question stays on your list to ask them live in that call. But where we're going to start off first is the get to know the operator. Who are they and what do they do? Okay, what is their background? Okay, how long have they been doing syndications or investing in real estate? How many have they done? How many of the deals that they actually taken what we call full cycle? So, have they exit? Did they sell their deals at the end? Did they just refinance out the investor as their exit strategy? Okay, whatever their exit strategy is, how many of the deals have they taken full cycle? And really dig into the returns here, okay? We also want to understand who is on their team, okay? What is their role? Now, we're going to go over some red flags here at the end. But just kind of a little sneak peek here. I love working with operations teams that have multiple people within the business structure. Okay, more than one partner. Okay, more than one person on the investor relations team. Okay, so why is that? Is because if somebody is out sick or, heaven forbids, transitions their jobs, that there's not a point of failure in the business. Okay, your experience as an investor is going to be smooth. Okay, that's what we're looking for here. Okay, ask the question, right? This is an interview. Think of it as a job interview. You're hiring a COO for your investing business. What have been their biggest challenges or failures, and how did they overcome them? Okay, guys, we just came off of COVID. Okay, I don't know an operator out there that didn't have some sort of blip, or like just downright tragedy during COVID. Okay, if somebody you're talking to has no issues, that's kind of a red flag to me. It means they probably have never been tested. Okay, so I'm looking for operators that can essentially take lemons and make lemonade. Okay, tell me about a time that things went rough for you, and how did you learn from it? How did you adjust, and how did you continue to deliver for your investors? That's what I want to get at. Okay. Another question that you could ask is, do the general partners invest alongside the limited partner investor? Okay. Now, this is kind of a nuanced question, and I think it's easy to say yes or no, but I think you need to follow it up here. Are they investing more capital beyond the acquisition fee? Okay, now for newer syndicators, newer operators, they may not have additional funds to invest beyond the acquisition fee. But as an operations team grows, we would want to see their capital investment alongside their operator or alongside their limited partner investors grow as well. So I think that's a really important question. All right. What type of asset do they invest in, and what is their class target? Okay, so are they investing in multifamily, self-storage, notes, residential assisted living, mobile home parks, right? Is that a class or an asset that you want to be involved in? And then what class in there? Are they, say like with multifamily, are they doing more class A, suburban type assets that are very solid? Are they doing more of a class C development deal where they're having to make, a tougher business decision on the path of progress of that asset? Okay, pick a part of that. All of those asset classes, or excuse me, types of asset and the classes within the asset have a different business plan risk. Okay, nothing's good or bad. It's you need to understand if it fits for you in your portfolio. All right, what is the typical investment strategy? Are they buying for cash flow? Are they buying for forced equity? Are they buying to hold the asset? Right. Okay, I've talked to some limited partner investors that get in on a deal, and all of a sudden they're exited 18 months later, and they're like, I got my capital back. And when you go back and you look at the deal, it was like, yeah, it was a development deal. Like this was a very short-term deal. So understand what the investment strategy is, and does that match the timeline to the investment that you're looking for? Okay, I like varying my timelines. I don't want to have like all my investments rolling out in the same year. Okay, I want to have them staggered. Okay, what are the major risks of that particular investment strategy? Okay, I want my operator naming those risks. Now, granted, when you go in on any sort of deal, you're going to have a private placement memorandum. It's going to be like 100 pages long. There's going to be, if you've never read one before, there's going to be language in there to scare the pants off of you. That is what it's designed for. It's a Securities and Exchange Commission disclosure. Now, I actually want the operator naming what the particular investment strategy risks are above and beyond what's named in that disclosure. Okay, and how are they mitigating them? Okay, it's not just naming them. I want to know how they're mitigating them. Are they raising capital expenditures at the beginning of the project? Do they have adequate number of operational reserves? Are they doing something unique with the lending to mitigate lending risk? So I want to understand just a little bit more flavor around the investment strategy and what the risks are. And then the market. Yeah, how are they choosing their markets? Like what draws them there? What data are they looking at? For me, I love being in growth markets. I want to see markets where the populations are growing, jobs are growing, jobs are diversified, big industry is moving their headquarters into. I want to see tax favorable investments. And I mean like, tax favored from the state perspective, pro-business. I want, if we're dealing with residential type projects like multifamily, I want to see, favorable landlord tenant laws, favorable to the landlord, so I can get to choose, or the operator can choose on how they work with the tenant. So those are things to kind of take into account. All right. The last bucket of questions, we're getting kind of down to the deal and some nitty gritties. Okay. Ask, can you pull out of the deal? Okay. 9.9 times out of 10, the answer is going to be no, but. Okay, so real estate syndications funds, they're very illiquid investments. Okay, I like them for that. At the same time, I really try to educate investors, don't put any money into that investment that you need to see back in the next 5 to 7 years, or at least for the duration of the hold. Now, life happens. We get it. Okay, and this is why what you're trying to get at with this question is, if life happened and you needed to get at that capital, is there a mechanism in the legal documentation to allow you to liquidate your shares, either to other limited partner investors, the remaining general partnership, or sell them on some sort, or find an exchange to sell them? Okay, so and that the answer to that question can really honestly be all over the board. Right? Ask the questions, how are distributions made and how frequently? All right, for me, I'm looking for investments that are distributing on a monthly basis. My bills occur monthly, so I'm looking for investments that are distributing monthly as well. I think quarterly is fine too. You just got to do like a little more balancing act around, how, on being able to manage those funds. Also, if for some reason distributions are suspended quarterly, it could take 6 months to catch up. So that's another reason why I really like monthly, is that it gives us more leeway into how we manage the distributions of the asset. Dive into like how they communicate, right? Are you going to get a communication on the day the asset closes? Are you going to get monthly communication? What's going to be communicated in that communication, right? What am I going to have insight to? Am I going to get to look at financials of the asset? If so, how often? Right? And then how are you guys going to communicate around taxes, right? That K1, okay, when does it come? Have you always hit the delivery date of March 15th, right? Those are some questions to ask here. Okay, now for us, we like communicating on a monthly basis. We'll communicate the day the asset closes, and then we also communicate on a monthly basis and give quarterly financials for all the assets and deliver the K1 by March 15th. Okay. Another question to ask the operators are, how do you make money, right? The operators are not running a charity. They should get paid, right? So how, and this is really what you're trying to get at, is the fees of the asset. Are they charging an acquisition fee, asset management fee, construction fee, okay? If they're doing a construction fee, there better be some construction with the deals, right? Are they doing some sort of capital event fee? If there's a refinance or a loan or a sale of the asset, do they secure their own loans? If so, then you might have a key partner fee to secure the loan, right? So, understand what the fees are and how much, what the fees are and how much they are. Okay. If you are going to go in on a deal, ask for references. Okay. Now, depending on the size of the organization, they could be dealing with hundreds of investors on a raise. So you might be paired, or actually that reference might not happen actually until when you've decided to actually go into an investment, right? So anyways, but you should be able to talk to somebody live and get their investor experience. Oftentimes, operators now will actually, take some live video snippets of their investors and post those on YouTube. But definitely, you can ask for those. And also ask at the end of the call, because these calls can be pretty lengthy. Make sure to ask, do you have any deals currently under contract, right? Get an understanding of what the deal flow is, and if there's something potentially coming down the pipelines that you can take a look at. I'm going to take a quick pause. Yes, this is being recorded. And if you registered for the webinar, which you guys all did because you're here live, you will get the recording. So don't stress out about that. All right. So the most important thing that I can tell you is make sure to pay attention to your gut. Your gut is your second brain. Okay. Maybe it's just me. I come from the health field, but you really want to pay attention to that intuition and how they're talking to you on the call. How are the questions going? Are they being open and transparent and honest? Are they following up with you? So do you get a general sense that I like these guys? I could be partners with them for 5 to 7 years on a deal, right? Trust that gut instinct, okay? I think that is probably, I call it the gut test. Like they could say everything right on the call, and if I don't get the warm and fuzzies when I'm off of them that they're going to take care of me as an investor, I'm going to continue to like watch them over time and maybe doing some follow-up calls with them at a later time. Okay. Now there are some red flags. All right, I did promise you. Now, Dan Hanford, one of our managing partners, he has written a very detailed 7-point list of red flags. I think it might even be more now. I think we're closer to 10 of like things that he and his wife look for in a deal that, are red flags. They don't invest if they see in this. Okay, now I'm going to give you my top 3 out of that list. And one is there only one operator? Okay, why is this kind of a red flag for me? Okay, is there only one partner in the deal? Well, it's because you have a single point of failure. If something happens to that one partner, what happens to the deal? There's nobody leading the charge for there. That's why I look for operations where there are multiple partners, because if something happens to one partner, the other one or two can pick up the slack and figure out the business plan to move forward, right? Are the operators doing this full-time or part-time, right? For me, I know people have to start building their businesses somewhere. I'm looking for at least one person on that team to be doing this full-time, okay? Generally more, the whole team doing this full-time. I like full-time operators, okay? That tells me they are serious about their trade, right? Also, does the team have the real estate and or business experience to execute on this investment strategy? You have probably traded your time for the money to invest. You want somebody to take care of your investment like it is their money, not yours. Okay, so, or excuse me, as it is your money, not theirs. Sorry, guys. I was like, I said that backwards. So again, you want them to be fully in on the deal. You want them to be doing this more than, full-time if possible, and definitely have that business background and real estate experience to execute on this. So those are just some red flags here. And guys, I know there's questions coming in. I'm going to field those here in a second. We're going to clean up as many questions as we possibly can. If you've got a question, this is the time to jump over to the chat or the Q&A box, drop your question in there. I'll be happy to tackle it. But if you guys are looking for some more information, if you want to get in on the weekly masterclasses, and if you want access to our deal flow here at passiveinvesting.com, go to the passiveinvestingwithwhitney.com. You can fill out a quick email form there. You will get access to all that information. You will go on our deal flow list, and you and I can jump on a phone call together. Okay, so you can actually start practicing these questions that I just showed you here in this presentation on me. Okay, all right, guys. So let's start tackling some questions. And if you have to drop off, thank you so much for joining today and taking the time to invest in yourself. And your time is your most precious resource. So I really appreciate that. Thank you so much.